Hi all, it's Shannon from Rock Solid Financial Services. I just wanted to have a brief chat with regards to loan preparation. A couple of things that we find that hold loans back, which could be prevented. So yeah, best to approach us before you approach a broker or banker before you go for a loan in advance, just to see if there's any things that need to be attended to prior. Cool. All right, we'll get cracking into it. So, with a few tips that we want to just explain, directorships and companies. So that's more so the business owner, entrepreneur. Um, yeah, with directorships, even with trustees and whatnot as well. Any entities, they do come up on the credit check. They might have slipped your mind or whatnot, or something that you didn't. It's worth declaring everything that you've established, even if the business is not trading. It's coming up. So we've had a few, even with strikeouts, so business strikeouts, they cause a bit of drama as well, and also dormant trusts. So it is best that these are addressed prior to submission. Otherwise, the assessor comes back and go, "Hey guys, check what I found. What's happening with it?" So, um, secondly, address late payments or any delinquencies with regards to that. Look, nothing's perfect. A lot of loans are 30 years long. Nothing's nothing is 30 years smoothly. So with payment history, even though it doesn't stay on your credit file that long, if there's any missed payments, late payments, and whatnot, just let your broker or banker know. We can mitigate it. We may even change the direction of what lender we're going to. So definitely, and also too, if there is money in the bank and it was an administrative fault, hey, that's yeah, that happens. So that's fine, but it's just as long. Once again, we just want to address that prior. Have your IDs ready, all your documents. So, driver's license, Medicare. You would not believe how many people have those expired, and then they have to go through and get it renewed. Right on for loan application. The two things that are most common with people with home loans is IDs run out, and they decide to go on a holiday trip when they're applying for a home loan. So common. I don't know why, but anyway. So driver's license, Medicare card, birth certificate, with marriage surnames. Yeah, they want to confirm your maiden name and your unmarried name. So the marriage certificate will support that, and the banks will require that for ID purposes. So avoid payday and short term loans. I have crossed out some examples of that because I don't believe we should be name throwing. But there's a few lenders out there that advertise amazingly for very fast cash, and that absolutely destroy your credit file. Rather than going to a tier one lender, you're looking at a tier three lender, which are not bad, but you're not going to get as good a rate as what you could be getting just because of these particular lenders. So generally, the payday lenders, the payday advance lenders, they can affect your credit file. And you'd be surprised actually that a couple of them are owned by debt collection companies as well. So yeah, quite interesting. But we see a lot of it. Yeah, the ads sound great, but it can be detrimental. I mean, you could just do a normal personal loan. No existing debts, so no your repayments, interest rates, the interest rate aren't as important, but more so of the current repayments. So with that, there's so many people that forget because everything's all direct debit. So that's quite important. And with the last video that we did, which is part of servicing assessment piece, that this plays a big part in that. Check your credit, so we can send you a free credit check, or we can. I think it's like $25. We can get the bank, what the banks see, but the free one's just as good. So we can send you the link to that, and then you can have a bit of a squizzy where you sit, and then we can walk you through with that, with any issues that pop up, and how we can address them. So it's not the end of the world. It's just basically we got to mitigate and address any surprises, so they aren't surprises for the assessor. So for deposits, if you got a deposit for a house, for example, they'll want at least 3 months genuine savings. So it's been sitting in the bank for that amount. So it's been sitting in the bank and not drawing and adding, drawing and adding. So it's got to be there, that amount that you disclose as a deposit for 3 months. So it's got to have 3 months history to it. Look, that's not the case with all lenders. There's lenders that are fine, that aren't genuine savings, but as just a rule of thumb. So that's pretty well it, I think. Yep. All right. Well, thank you for listening, and yeah, I guess we'll see you in the next video. Thank you.